Welcome. Today we're doing a full deep dive on TD Power Systems, one of India's most exciting mid-cap stories in the power equipment space. We'll cover what they do, how they make money, the numbers, the technicals, and whether this stock makes sense at current prices. Let's go. Here's our roadmap, 7 sections. Company overview, how they make money, the numbers, the growth story, technical analysis, risks, and our final verdict. TD Power Systems was founded in 1999 in Bengaluru. They manufacture large industrial AC generators, the kind that power entire cities, steel plants, data centers, and hydro dams. Their output ranges from 1 megawatt all the way up to 200 megawatts for steam and gas turbines. They also make specialized motors for oil and gas and industrial applications. This is not a consumer product company. Every machine is custom engineered to order. They have 3 manufacturing plants and export to Japan, Europe, the US, and beyond. Approximately 70 seconds. TD Power's business is split into 3 main revenue streams. The core is generator sales, massive custom-built machines for power plants. They also earn from motors, spares, and refurbishment. What's really exciting is exports. By H1 FY26, exports made up 66% of total revenue. They have licensing and supply agreements with GE in the US, Siemens in Germany, Toyo Denki in Japan, and Voith Hydro. This global partnership network is a huge competitive moat. It took decades to build and cannot be easily replicated. Let's look at the numbers. TD Power has grown revenue by roughly 35% year-on-year to about 1,615 crore rupees on a trailing 12-month basis. Net profit is 220 crore rupees. EBITDA margins are expanding at 18.6% in Q3 FY26 versus 17.6% a year ago. ROCE is a very healthy 28 to 30%, meaning the company generates excellent returns on every rupee of capital it deploys. And crucially, they are nearly debt-free. In capital-intensive manufacturing, operating debt-free while growing aggressively is a strong signal of management quality. Q2 FY26 was the standout quarter with 452 crore rupees revenue and 60 crore rupees profit. Here's where the story gets really compelling. In FY25, TD Power recorded its highest ever order inflow of 1,478 crore rupees, a 41% jump year-on-year. The 4 key growth drivers are AI data centers globally, India's hydropower push, railway electrification, and a massive export boom. 76% of H1 FY26 orders came from outside India. Management has raised guidance. They expect 1,800 crore rupees in FY26 and a minimum 2,000 crore rupees in FY27. Their third plant in Tumkur is only 30% utilized, meaning there's a clear capacity runway to execute on this. The shareholding pattern has some interesting dynamics. The headline concern is promoter holding dropping from 34% to 27% in a single year. That's significant. Investors need to understand the reason. It could be equity-based compensation dilution or actual promoter selling. On the positive side, FIIs have been consistent buyers. Global funds going from 18% to 24% is a strong vote of confidence. The domestic fund exit is worth watching as a valuation barometer. Look at this price chart. TD Power went from 14 rupees in March 2020 to an all-time high of 954 rupees in April 2026. That's a 67-bagger in 6 years. The stock has returned 126% in just the last 12 months. The technical picture is mixed near-term. MACD on both weekly and monthly frames is bullish. That's encouraging. But the weekly RSI has turned bearish, which suggests short-term selling pressure. Bollinger Bands are mildly bullish. The KST oscillator on the weekly is mildly bearish. The overall technical rating from multiple screens comes out as strong buy. But with the stock near its all-time high, risk-reward for new entries is asymmetric. Key support is Rupee 800 to 850. Beta of 1.7 means this stock moves hard in both directions. Every stock has risks, and TD Power is no exception. The 2 big ones I'd highlight are, first, the promoter stake decline. Going from 34% to 27% in a year needs an explanation. Is it ESOP dilution or actual selling? Until that's clear, it's a red flag. Second, valuation. At 64x PE, this stock needs near-perfect execution. Any earnings miss, guidance cut, or macro slowdown will hit the stock hard. Working capital is getting bloated. Receivables growing faster than sales is worth watching. And with a new CEO just starting, there's execution continuity risk. Finally, this is a cyclical business. Any slowdown in infrastructure capex globally can hurt order inflows. Let's talk numbers on valuation. At approximately 64x PE, TD Power is 45% more expensive than its sector peers. P/B is 16x, EV/EBITDA around 50x. These are growth stock multiples, and the growth is definitely there. but it's priced in. Analyst price targets from major brokerages range between 654 rupees and 911 rupees, below or at the current market price, which tells you upside is limited unless the company meaningfully beats guidance. Our three scenarios: bull case of rupee 1,100 to 1,200 if FY27 guidance is smashed and margins expand further; base case rupee 850 to 950, essentially flat to current price; bear case rupee 550 to 700 if growth decelerates and the promoter selling story worsens. Our verdict: hold if you own it. Accumulate on dips toward rupee 800 to 850. Not a fresh aggressive buy at 942 rupees. Here's how TD Power stacks up across 7 dimensions. Business quality and financial health both score 9 out of 10. This is genuinely one of the highest quality manufacturing businesses in India. Growth visibility is an 8. Where it loses marks is valuation, only 5/10, and the promoter situation brings management/shareholder friendliness down to 6 to 7. The technical setup is a 6, near all-time high with mixed signals. Overall, this is a 9/10 business, trading at a 5/10 price. Let's wrap up. TD Power Systems is a genuinely impressive business, one of the rare Indian manufacturers with a global competitive advantage. The order book is at record highs, exports are booming, and the financials are clean. But at 64x PE, you're paying top dollar for a great story. If the stock corrects toward rupee 800 to 850, that's when the risk-reward becomes attractive. If you already own it, hold the fundamentals support the long-term thesis. If you're watching from the sidelines, be patient. Great businesses at great prices are worth waiting for. That's a wrap. Like and subscribe if you found this useful, and drop your thoughts on TD Power in the comments below.